This is how much I make consistently from the market on a weekly basis. And I'm going to show you how to do that right now. Pretty much the one and only strategy that I use are spreads. It's a great way to limit your risk while also being able to capitalize on theta and give you good risk to reward in multiple ways. A little later on in the video, I'm going to show you exactly how I made this trade, which netted me a little over $7,000. I'm also going to show you exactly how you can make these kind of trades as well. First though, what we're going to do real quick is actually go over the CRM trade, which is a little smaller, only netting me about $150, 44% return though, which is still very good. So the first thing I did was actually alert the trade to all my followers who need a little bit of guidance. So what we did in the trade alert was actually sell the $200 put and purchase the $197.5 put. This gave us $34 in credit per spread. I'm also going to show you exactly how to place this trade on your broker. So for Robinhood, I'm just going to use it as an example because it's very simple. First thing you're going to want to do is actually look at the alert and see which one that we sold. This was the $200 put in this case. So what you're going to want to do is actually click sell and puts, and then click the $200 put. Then what you're going to want to do is switch to buy and then click the $197.5 put. So what we're doing here is actually called a credit spread. Since we sold the $200 put, all we need for maximum profit on CRM spread is for CRM to expire above $200 stock price on the sold date, which is June 23rd. Typically, you need a larger portfolio to be able to sell options on a stock, but what we're doing is actually purchasing a lower strike price, which limits our risk, allowing us to do it with a smaller portfolio. This allows us to capitalize on theta time decay. So this CRM trade was able to net me about $150, but the important part here is the 44%. So I had a fairly small position size in this trade, but if you were to put in about $1,000, of course you need a little bit of a higher cash collateral, but $1,000, 44% on it would be $440. And this trade here only took about 2 days. So if you're able to net $440 on $1,000 in 2 days, that's pretty good. I also called this trade out directly for all my followers to follow easily with my alerts. Now we're going to go over the Tesla trade that I made, which gave me about almost $7,000. And I'm going to show you exactly how you can make these kind of trades as well. But first, what we're going to do is actually go over the CRM chart, which made me take the CRM spread. So what we did, right, is sell the $200 put. So all we need CRM to do for us to get a max win is for it to stay above $200 price by June 23rd, right? Because that's the date that we sold the spread. I know the chart may look a little foreign to some, but I hope you can follow along with me here. So the date that we sent the alert was 6/13, right? And we sold the $200 put, so we just need to stay above $200 stock price. So this arrow here is when we sent the alert out, right? This is when we sold the spread. You can clearly see here that $200 level is a good support, right? It was a great resistance. 1, 2, 3, 4 taps until it finally broke above it. It's in a long-term uptrend. You can see here. You can also see that CRM kind of started to bounce in between a range, right? You know, created 2 levels and it kind of stayed in between them. Once it came to the bottom of this range, I saw it as an opportunity and I alerted it and got into it myself. And, you know, just within a couple of days, we were able to get 50% out of what we put into the trade. So as you can see, this was kind of a chill, non-stress, good, profitable trade. And, you know, with strategies such as this, the odds are oftentimes in our favor. So a good amount of trades do actually go just like this. So that was the credit spread portion of the video, and now I'll be going over some debit spreads. This particular trade that I made here was actually alerted to the followers in the Discord, and it was a Tesla debit spread. Okay, so this message here is the actual alert that I sent out to the Discord for everyone to enter. So what we're doing here is purchasing the Tesla $210 call. So what you'd want to do is go over to buy and call, and then you'd go over to the $210 strike price. You would click this, and what we did was sell the $220 call. So then you'd go to sell and you would click the 220. What this does is a 10 wide debit spread, which allows us to make $788 per spread since our cost basis was $212. So you can see in the message here that I talk about a $212 cost basis. This is how much we paid per spread. And what I did was actually do a write-up at the time explaining why I chose the strike price and why I chose a debit spread rather than a naked call. So I did this write-up to actually help educate the people that are following, right? I don't want them to do it blindly. They're supposed to be learning while they make money. I'm just gonna go through this real quick and explain it. So the $210 call theta is about $15. The 220 call theta was about $14. So in between the spread, you would lose about $1 in theta per day. If you were to just purchase the $210 call while on Naked, then I lose $15 per day from Theta. But with the call debit spread, I lose $1 per day from Theta. So the pros are that we are paying much less in Theta and risking less capital. The cons are we are capping our max win. If Tesla were to move to 230, we would make no more than if it were moved to 220. So the max profit per spread is $788. The max loss is $212. After only 20 days, we ended up selling the Tesla debit spreads for $905 per spread. So if we purchased them for $212 per spread and we sold them for $905 per spread, is about a 330% winner. So since I purchased 15 spreads, I scaled out a little bit on the way, ended up making approximately $7,000. If you would like to take some of these spread trades along with me, then I'll be alerting all my trades in the Discord. The link to it is in the description. I actually have a little write-up on the Tesla chart for all of you guys to understand how I do my research. First, this arrow here is where we actually purchase the call debit spreads. Here's the alert that I sent out. This is about a 330% winner. My reasoning for the trade was that we are basing above a meteor level, which is the 178 level. As you can see, we broke above it, and we started to form a hammer and a higher low. We broke above a downward trend line. This is this yellow line here. Higher lows on the daily leading up to it. You can see here, higher low, higher low, higher low. There's actually some fundamental reasoning to this trade as well. I'd also seen that many other names at the top of the market cap list, such as Apple, Microsoft, Amazon, Google, Nvidia, Meta, they all had made a decent move to the upside, and Tesla was kind of just the last one of the pack. That was just a little more confirmation to my long position. So this here was actually my track record for June. You can see we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 winners, 1 break-even trade, and 1 loser. The loser was unfortunately a 86% loss. That is fairly high compared to our typical loser. But you can see it was easily outpaced by the other winners that we had. And we're looking to have another great month in July. That's it for today's video. Remember that if you would like to join the Discord, the link is in the description. Please use code SCOE at checkout. You spell it just like this. Thank you guys for watching. Please subscribe, and I'll see you in the next video. Peace.